Everyone, welcome to today's session. It's going to be a little bit of a shorter session here, and so let's just jump right into it. Market conditions still remaining mildly bullish in this overall bull market and having a little bit of a pullback. We had a pretty nice run here, this last week, SPY. If we take a look at SPY, and really shot up, this last, that's not it, SPY. It looks similar though, actually. SPY, there we go. A little bit of a pullback here today. You can see the last 2 or 3 days after this real sharp run up. We had that bearish move, that engulfing bar that happened right around a resistance area, and within a couple of days after some of that Fed talk last week out of Jackson Hole, we saw a nice move higher. So markets are looking out ahead and looking to see, potentially if interest rates and inflation are going to be in check and if they're going to be issues. So remember that the market's always forward looking, and current news is already going to be priced into the market months ago, unless it's really outside of what the market expects. Otherwise, it's going to be pretty much in line, and then the information that's being discounted is information that's out 6, 8, 12 months into the future. So markets are looking out that far now, and we had a decent run, so a couple of days of pause is not going to be out of the norm. If we continue to reverse, or if we reverse aggressively and we break through some support areas here, now that we're back up inside this momentum area, we want to see this area holding. And we had some really, quite some positive breadth moving here this last few days within this overall uptrend. If I run out here and take a look at the sentiment, we really bounced off those lows and really just moonshot without any kind of a pullback. You can see typically, you at least get a little bit of a pullback along the way here. And this is just, we had one of them. We had a smooth ride all the way to where we're at currently, breaking up above that 50. So we'll see if we pull back at all right here, and if there's anything that the markets are going to be finding negative or positive here in the shorter term. The Dow, NASDAQ 100, S&P 500 were up above on those, really all those four, and the S&P mid cap were up above 1 now on the buy sell ratio, which essentially means that there are more buys than there are sells in the database. There's a few that are stuck right here in that middle, but overall you're seeing positive breadth to the upside, and that is one of the instruments to be able to utilize for looking at breadth. The other one that I like to look at is the sectors and the sector ETF to see which of those are actually, and how many of those are in uptrend. So we're seeing, energy is moving higher, technology is still higher, telecommunications, and some of these others are stuck in hold but have short-term trend up, which means they are moving in that direction and probably close to a new buy or an uptrend. A few things pulling back here, as we talked about. We'll see if that ends up being significant. If this is a counter trend, one of the issues when we have a significant break of trend and we're starting to move one direction, if we have this uptrend and we break through it, whether or not this becomes the new uptrend and this is a counter trend and there's more downside to come, or whether or not this is the trend direction, this is counter trend, and there's more upside to come that way. This area right here kind of gets a little clouded on what that overall direction is. We know that the overall bull market is still in place, and so that can be our bias when we're looking at this long-term uptrend. We knew that it was really extreme to the upside, and it needs to have a little bit of time to settle out some of that froth, so to speak, and allow for a more sustainable uptrend. And that's what we've been seeing here in the markets just for this last couple of days is all. A holiday week also slows things down a little bit, and this transition from really summer into fall, and there tends to be a little bit of volatility happening in the markets during this time frame as well, during August, September, even into October as well. If we take a look at we'll take a look at a few different things that I wanted to go over today on as far as some of the screen functionality to be able to utilize in portfolio analysis to be able to focus on. Remember with portfolio analysis that, you know, we tend to get sucked into, I'm actually going to go to this Muscle 10 strategy. We tend to get sucked into shooting for the one hit wonder. You know, we want the one stock that is going to really go up huge and it's really going to benefit us, and that's just hard to pick that one stock. So ideally, the overall approach and the probabilities start to stack against you when you're banking on one stock versus a group of stocks, but not overly diversifying. If you go overly, you know, if you're going 500 stocks, you might as well just own the S&P 500, or 100 stocks just owning the NASDAQ 100 or the S&P 100. You can certainly do better, or potentially do better than the markets as a whole by, you know, selective stock picking, and that's part of what we focus on in the Muscle 10 and 20 strategy, or really whatever that time frame, whatever that number turns out to be a comfort level for you. I've talked about even up to 50 stocks. Buffett has about 50 stocks with Berkshire, and not a lot more than that, because you end up over diversifying, or potentially over diversifying your returns as well. So as you're building out portfolios, working on top quality stocks, best of breed type names that are moving in an uptrend, and as they start to reverse and head back out of that uptrend, then replacing them with something else in that category. And so to create a systematic approach to that, you can utilize any of the screens that, either a predefined screen, which are muscle stock screens, or your own screen, which is allowing you to add whatever additional criteria you may want to select from. And we had talked about this last week as well, with the process of, well, which one should I start with? Which one should I be buying? And part of that is simply, which strategy are you wanting? Are you wanting to be able to focus on, maybe I'm just using the Dow stocks, for example, and one of the strategies is just buying whatever Dow stocks are in that buy zone, or are in that uptrend, or have buy signals currently. If it moves out of that, I would replace it with one that is. So in this case, I've got 12 stocks in uptrends that are in the Dow. Caterpillar, which is right on that edge, it's in that upper zone, pulling back a little bit here, but in that overall nice uptrend. DuPont, which is also a Dow stock, which is also has been moving higher, got a decent little pullback here as well today. So we may see some of these stocks that have been starting to notch back up into that uptrend, having some pause and counter trend. That'll be interesting to keep an eye on here in the next couple of days, to see what we actually get out of this market, if we get some continuation to the upside, or if we just get a little pause and a whole lot of nothing until we end up getting more upside to come. Here's a couple. So there's two stocks that may potentially notch back into hold signals this week. Visa, let's take a look. Let's just take a look through some of these and see what they're looking like. And ExxonMobil, also, it should be continuing to do well. Oil is continuing to go higher. And Intel, which has had a nice week last week, looks like a potential breakout candidate on Intel. Chips are looking good, and have been in this last rally. They really, tech stocks have really shot up out of this move here. Walmart, IBM has been a nice leader, continues to be a leader. It's up in this extreme zone, which is okay. It could pull back as long as we're continuing to trend higher and we're in this upper range. And in this case, if we're focusing on Dow stocks, then those would be a handful of stocks that we could utilize. If we're focusing on something else, again, if we're focusing on indexes, then we could say, let's look at the NASDAQ 100. We've got 27 stocks there. Of those stocks, which ones do I want to participate in? Obviously, NVIDIA has been the high flyer and is still in that overall uptrend, and having some volatility towards the upper end of that range. That's completely normal. Netflix is kind of coming to life here. It's up 2.5% today, and potentially breaking out of this range and entering into that momentum zone that could continue to see some overall upside as well. Applied Material, also a chip name to the upside, looking good. Lam Research, which has had a pretty nice move here in this last year as well. So that, one of the things that we also have to deal with are stocks that have been in really solid uptrends for a length of time, and they just need to pause, to correct. They're not going to go straight up forever. And So in terms of replacing a stock, there are a couple of ways to do that as well in the portfolio. Now, this strategy that I've got here using this Muscle 10 strategy is, let me go back to portfolio, is focusing on muscle stocks, and as they pull back into a sell signal, so let's look at a couple of these and see if they're close. In fact, we can go here and look at this overall portfolio, look at it like this. So let's start off with the top. WFRD oil stock has had a big gap up today and then retracing, but still looks good. Not near the stop loss. So I want to have an initial stop loss set up, which is going to be, in this case, it's that initial capital number. Okay, so if I'm placing a stop loss, I can always adjust that stop loss from week to week, or you can decide obviously how you adjust that stop loss. One of the stop loss processes is to utilize that 236 level on the snap tool. So let's take a look at WFRD. So I've got WFRD with an initial stop loss at 80, up 7% on that, and let's see where this level is here. So 80, I've got it just below this. I'm going to keep it there until the next retracement. So because this is this initial move, this was the initial stop loss, and we haven't retraced any of that yet. I would prefer for the stock to retrace and see if it's going to find some support and then go higher. Or in this case, I'm still willing to give back a little bit of that in order for it to maintain its upward trend and allow it some volatility. Stocks are going to have volatility. We know that now we're in the upper end of that range. It could pull back. It could, and typically it's going to pull back into that buy zone, maybe retest those levels, find some support, get new buy demand, and continue that overall uptrend. It's not a fast process. I think a lot of traders want everything in 35 seconds because they're seeing all of these YouTube videos that have people, they've got their screen up and the tick by tick on the futures chart, and they're making hundreds, if not thousands, if not tens of thousands in a really short amount of time. That's super compelling, but that may not be your strategy to be able to focus on. So it's going to take a little bit more time, days and weeks, and that's, for me, that's okay. I'm okay with that kind of a time frame for a longer term portfolio. For shorter term and real aggressive time frames, we can certainly change that time frame and change that strategy around. But in this case, for what we're focused on, we want to own the best stocks that are in uptrends and that are continuing that overall uptrend. Some are going to continue to do that, some are not. That's why we do multiple stocks, 10, 12, 15, 20 stocks, to be able to start up a portfolio, manage it, get some big winners that start to grow and start to work, and then we get a handful that don't, and we replace those out. So we want to let the winners continue to work. We'll continue to hold those and let those run higher and higher as long as they go higher. And the ones that aren't working, we will sell those, stop out of them, and replace them with a new stock out of the list. So in this case, I could go to the muscle stocks list. I could simply pick new buys as long as they're above. In this case, I could choose. I could say if I had a stock that was stopped out or that had a sell signal, and I could simply go in the next morning and replace it with a new buy list stock of anything that's 99 or higher, or 98 or higher, or the top of the list, or whatever the criteria. Or if that is not my list I'm choosing from, you want to have a list that you're rotating out of. You're rotating your losers with a new entry, a new winner. So I could simply say, I want new buys, and I've mentioned this scam before, just because if you want to include something that has maybe fundamentals or a positive growth story, so that for sure that the company is working and the stock price is working, then that gives you potentially a higher probability trade. So sometimes that's not the case. Sometimes you get a stock that just flat out has interest of it going higher, and there's a lot of demand for whatever they're going to do in the future, not necessarily what they're doing right now, because they maybe have a new technology, or they have a new product, or a new idea, or maybe they're a disruptor in a new segment or sector, and they're not. Maybe they're relatively new, or it could be a a biotech stock and they haven't been FDA approved yet. There can be a lot of reasons why stocks that don't have profits or decent fundamentals are moving higher. They add more volatility. They may add some potential reward, but also certainly will add additional risk. So if you want to say, nope, I'm only going to do large cap or ultra large cap, and I want all of them to have, excellent fundamentals, then you can create a scan for that. So you could simply say, let's start out with this 10-10-10 buy to hold and see if this gives us anything decent today. And so we've got 8. Eli Lilly is the top of the list, and the scan criteria 10-10-10. We could even add, well, let's just leave it the way that it is. We've got from hold to buy, so we know we've had a trend shift in the last day, and we also know that they're fundamentally strong companies. So I could go in and say, let me look at Eli Lilly. Say, is this one that I would want to swap out? So you've got, now the scan was as of Friday. And so you've got the yellow and the green, and then this is as of today. So it's right on the edge of that, but it's already had a big run up. That could simply be the one that I'm going with, or I could choose something else. Okay, this is a buyout stock. I've seen that one come through before. TEX, again, really good fundamentals, a decent pullback, had a nice move. It's due for a pause right here. I could add that one in on this pullback if I so desired. But again, my process of looking for something new is going to be consistent. I can add that in. I can simply say, yeah, I'm not gonna add new stocks as long as the buy sell ratio is less than 1. Let's see where we're at. We know that we're getting close, but we're 0.83. So I could add that to my criteria as well. I could simply say I'm only buying stocks in bull markets. I'm only buying new stocks if buy sell ratio is above 1. And therefore I had a stock get stopped out, buy sell ratio is not above 1, I'm not going to add a new stock that day. Okay, so you can get as detailed as you want in terms of the allocation process and the market conditions that you want as well. You could also simply, there are portfolio strategies to utilize around market conditions. We've talked about this with ETFs. So you've got the muscle ETFs, which are going to have a lot of different ideas that are listed here, from long and short to double long and short and leveraged and volatility and sectors and commodity ETFs like sugar. We've seen that one in there and staying in there for the last few weeks, continuing to move higher. You can see in the green. And so if I wanted to add a little more diversification without adding more stocks, I could simply use an ETF as well. So I could go into my new buy ETF and say, well, what's new buy ETFs looking like today? I've got oil services that are moving higher. If I don't know which oil stock I may want to own, I can own them all, whether that's the services sector or there may be something else that's interesting in there as well. Gas and service. I may choose leverage, 3x, 2x, or just flat out go with just a traditional ETF that is just tracking the performance of an index or a sector area as well. Lots of options, and sometimes too many options, right? There's so many things to be focusing on. It's like, well, which one do I want to be focused on? That's a part of the trading plan process and creating that so that you're comfortable saying, I'm only going to do this in these market conditions, and here's my entry process, and here's my pardon me, my exit process as well, utilizing those ETFs. And across the board, you've got just these different scans that are going to give you different ideas. The smooth sailing, again, you can go down here to the bottom and look for what the criteria is that's pulling that in. ETFs that have a buy rating, a strength rank of 90 or greater, and volume of 100,000 shares or more. Okay, that's going to be pretty similar to this one as well. I think there's a little less volume on these, or no volume rank on that. So you can add the new buys. The bottoms up typically have lower ranks. So this may be an area that is just emerging. Sometimes they're weak for a reason. They have been moving lower, and they're just they're kind of bottom fishing, and they're coming up off the bottom. there as well. There's a lot of those to go through, and so as you're looking at an ETF, you certainly want to do some additional homework on that. Check it out inside of your brokerage platform, inside of your brokerage account, and make sure that that's something that you want to be able to work on. Same with the muscle stocks group. You've got different criteria. The spring loaded is, sometimes people like this because these are stocks that have moved. They're in uptrends, but they've moved from a buy back to a hold. Like AAOI has been a real high flyer this year, but it's kind of pausing right now. Shorter term, it's pulling back. It's still in that momentum zone and has some support, but you're not going to see it in the muscle stocks group anymore because it has gone back to a hold. Okay, so it's changed and now it's jumped over into this one. So if I'm looking for stocks that are still strong stocks, but they're pausing that overall uptrend for whatever reason, then I could go in and I could select some of those IMGN, see what some of these look like. So here you had a really big uptrend. It paused, it eventually reversed, and now it's kind of, yes, it's got a nice rank, but it's starting to show some weakness. We could wait and definitely would want to wait for that to move up into that upper range and allow for the continuation of that overall trend. So that's the spring loaded. Bottoms up, same thing here. You've got lower ranked stocks that may just be turning the corner and heading higher. Not always. Sometimes, again, they may be weak for a reason. They're just not moving as aggressively as some of these other stocks. Depending on your strategy, that may not matter. The real core of the rank is how is it doing in relation to all stocks in the database. So if I'm really looking for just really the strongest movers out of that group or out of the market as a whole, then I can choose from these because I know that these are the strongest ones in moving, and they're moving in the right direction. And the theory, okay, the idea, the methodology behind that is that as they're moving in a certain direction, the path of least resistance is in that direction or continuation of that direction. So if it's moving higher, then I want to continue to trade that stock higher instead of saying on the stock chart, oh, this is high and this is low, and so I should have bought low and sold high, versus it's moving in the right direction. I like it. I can still continue to buy into it here and anticipate more upside. If it's growing, it's a good fundamentally stock, then watching for that momentum to continue to the upside would be the strategy. And this is over. This is past. All we're focusing on is it continuing? Is it working at this level as of right now? And that's what I'm most interested in when I'm looking for a stock or a strategy. So the portfolio here, again, the strategy essentially looking for high-ranking stocks that are muscle stocks. In this case, I'm waiting for them to either get a sell signal or hit the stop loss. Which hasn't happened on any of these yet. I could also add a criteria to if it just stagnates and it's not moving and I'm getting bored with it and it's really not performing, or it's starting to show additional weakness, the rank is going to start to drop. If the rank starts to drop, and maybe I set my parameters to say, if the rank drops below 95 of any stock in my portfolio, then I may want to swap that out with something else. Okay, this one has a 96 rank. It's had a huge move here as well, and so that's probably going to catch up. Some of these have had even bigger moves though, so this has had a big run up, and the momentum is looking quite good on it currently, and it's in that upper range. So what have we got here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I've got the 10 that are in there. They're not comprising a big chunk of the portfolio, and in this case, a lot of this is to be able to potentially go up to 20 stocks, and then also market conditions. We've had a big run, and I don't want a full portfolio potentially taking it up to 20 stocks and getting 50%, still having 50% potentially in cash at this point. So lots of different ways to do it, lots of different ways to manage it. The biggest factor is what works for you. What are you comfortable with? What kind of stocks do you like to own, or do you think you could handle owning in terms of volatility? Is it too many stocks to manage to have 30 or 40 stocks? Do I only want to focus on 10 at a time? Do I want that 10 in my portfolio to be the 100% allocation so that I'm fully invested in those 10 stocks? That's a higher reward to risk methodology, and typically the one I would prefer, but with a fixed amount of cash. Okay, I think that still focusing and saying, okay, of this amount of cash, of this 25% of my capital that I'm allocating in this portfolio, then I only want 10 inside that 25%, knowing that I've got a lot of cash left. You can mix and match, and you should, so that it's suitable for what your risk tolerance is, your ability to understand what kind of stocks you own, the amount of risk that you're actually taking, what happens if it drops significantly, what happens if it rallies significantly. Okay, these are all things that it's not that difficult, but if you're newer to this, then being able to get your mind wrapped around what am I doing and why, so that you don't all of a sudden just forget and have a portfolio of stocks and you forget to go in and look at it, and maybe you've got 4 or 5 that have dropped and you haven't made an adjustment. If you've got too many stocks and it becomes too much of a burden to be able to do that, then you realize, hey, this is becoming a little too aggressive portfolio management methodology for me. Maybe I need less stocks. Maybe I need to focus on just a handful of ETFs that are in uptrends, and then in addition have a few stocks that I like on top of that. There's lots of ways to do it, and there's no perfect way to do it. It's simply because risk level, suitability for the kinds of stocks that we're looking at are going to be different for every single person, and you want to be able to apply that for what works for you. You're going to know your own ability for risk. You're going to know. If you don't know it yet, you will, in terms of, man, I can't keep up. I can't watch these things as often as I thought I was going to, nor do I want to. You may realize I don't want to watch these every single day. It's driving me crazy. I only want to check in and look at them once in a while. Then this is TradersPro is an end of day methodology. So it's designed to be a little slower methodology so that your signals are coming at the end of the day. You can analyze it at the end of the day or the first thing in the morning, make portfolio adjustments going into the next trading day, and keep things a little bit slower, a little bit more methodical, so that you're not gunslinging. You're not, buying and selling and actively having to be staring at your screen all day. That's not to say that that's, again, it's just a different method. There's lots and lots of different methodologies to be able to choose and focus on, and this is just simply one of them, one of those. So let's take a look at what time we got. 12:30. Yeah, so a few different stocks. Markets again are going to be a little bit slower here, a little bit muted, and that's not surprising for the current market conditions. And let's see, let me just jump over here. Sorry, I don't know, run into this every once in a while with a little bit of slowness. And there we go. INOQ, that was the new buy for on the top of the list today, moving nicely there as well. And let's just jump back. We'll just kind of recap market conditions. Let's look at indexes and market ETFs. Let's see where we're at here. NASDAQ, triple Qs, technology still doing well. Let's see what's not doing well. Keeping an eye on bonds right here because that's been an issue. This right here, this is something that we don't necessarily want to see right now. We would definitely like to see this rally in bonds continue to go back up, because what's happening here, remember that when bonds are going down, interest rates are going higher. We don't want that right now, neither does the Fed. So this bearish profile on bonds, it's been like this for a length of time. It looked like it might want to stabilize and maybe find some support and then work its way back up this direction. But as of the last couple of days, not so much. That could affect equities here if that does not stabilize and start to find some support right here, and then potentially even start to reverse back up. Because a part of the rally that we had in stocks was in this last couple of weeks was that bonds were moving this direction, that they were moving higher. That helped calm the overall markets right now. So this, as of right now, this is not a real bullish thing for equities, but who knows, right? Markets are always looking out. They're looking out. They may have already priced this into the markets right now. And let's look at the Dow. Dow just pulling back. Again, we're now in that upper band, that upper range of momentum really across all markets. And let's see if this holds and continues. If that holds and finds some support, and in the next couple of days we head higher again, we more than likely are going to test those all-time highs on the Dow, really across all markets. They're just looking, they have been looking quite solid, and we could see a decent rally and test those. Once we get to those resistance areas, then those are going to be some key areas to be focusing on if we get some kind of continuation or if we start to run into resistance right there. I'm going to end on that note. Thanks everyone for your time and effort, and we'll see you next time. Thanks a lot. Bye now.